daily outlook into Tuesday, June 16th. You can see that the previous day's range, obviously we had a gap up at the open, and overall the previous day's range delivered as a classic buy profile. Okay, so an expansion profile. This will leave us some kind of important levels on the lower time frame, right, to frame the order flow into the day of Tuesday. Overall, I believe that the draw on liquidity remains all-time highs plus more, but it's going to be interesting nonetheless to see how this day develops, because on the economic calendar front, obviously yesterday we had no economic data. We have no economic data, at least of importance today, and this is the day before FOMC. Right, we have the interest rate decision tomorrow, and so overall the idea that I have for the weekly profile is, since yesterday was an expansion and today either consolidates or has a retracement to expansion, or simply a retracement that closed inside of the range, then overall that I believe that this would favor an expansion higher for the day of FOMC. Look, so far nothing is telling me that price wants to come back towards the new week opening gap. Now, we do have some divergences between daily highs at these levels, but like we have this and we have this here, but overall I don't consider these too high probability, simply because we're trading so close to the range high, right, which is ultimately the low-hanging fruit draw on liquidity, for this week. Okay, so if today will keep on expanding, then that's personally a scenario that I wouldn't like to see. I would want the market today to revisit some kind of level around 50% or discount of the previous daily range before trading higher. And doing so would create the range of a daily BISI, a daily inefficiency inside of the range. Because if today expands again from these levels, then I'll start getting suspicious that because Wednesday will be at FOMC, right, that will be a driver to send price back in the range. So overall, that's what I think for the weekly profile. If today's going to consolidate or retrace, then I believe that this will favor a weekly profile such as a classic buy. Friday is a bank holiday, but nonetheless, what I essentially mean is an FOMC expansion with the trend. If today, on the other hand, would fail, say, to consolidate, then create a phase of expansion, consolidate or retrace and create a phase of expansion, then I do believe that FOMC could be a driver to send price back inside of the range. Okay, but we'll see that in time. Meanwhile, the market has inverted the premium SIBI inside of the range, creating obviously the new week opening gap, and here potentially the range of a daily BISI, all depending on where today closes. Okay, so if ever the market is were to come back around these levels, you want to anticipate that these levels will be used as reaccumulation to distribute towards premium. In case today will be a reversal profile, or something similar to that, either it could be also an expansion profile that sees a reversal at the closure. Just pay attention to any divergences at the range high. Or if not, any session divergences that form above range high. Okay, say, I don't know, London trades here, right, then price consolidates, and New York trades higher on the S&P 500, right, already starts trading lower. That can be a factor, right, for price to return back inside of the range. We can see from the standard deviations on the 3-week look back, right? We can now start anticipating a phase of reaccumulation inside of this range. We saw the smart money reversal. We saw the low risk buy, right? And at the moment, price is trading between 1 to 1.5 standard deviations. Right, and yesterday having been a phase of expansion, I think that it is possible that the market will find, right, say some kind of bearish swing to Z, or can be also a bullish profile, but first revisiting the range of discount inside of the range. But right, being inside of these levels and being the day before FOMC, which again is the main driver of the week, especially with the week being a 4-day week, right? As Friday is a bank holiday. Gun to my head, I would anticipate something like this or something similar to this. Right now, it doesn't have to be exactly with the levels of the pre-order block. Price could retrace, say, at these levels. Right, the 4-hour at the open of the week created a fair value gap. Okay, that's always significant in price. In fact, the BISI that I've marked out here at 50% of the range was exactly the same scenario. Now, obviously, here we have, price expanded much higher, right, than at these levels where the market opened, created a 4-hour fair value gap, and traded off it before expanding. Okay, so maybe this level a bit more pertinent in case of an open high-low close profile, or relevant as a target in case of a FOMC reversal or expansion towards discount. But at the moment, right, price has inverted this pre-order block. I do believe that this range here can be enough to send price higher. I don't really believe that price needs to come back too low inside of the range. If it's going to do so, I think it's going to be related to FOMC. Right? That's the idea that I have. Overall here, the range is pretty high resistance, right? And being at 1 to 1.5, I wouldn't be surprised if something like this happens. What would surprise me is price trading from premium at these levels. Right, without first revisiting some form of discount or having a prolonged, some kind of long consolidation or phase of accumulation inside of the range. Right, see here from the open, price starts trading higher. Everything's possible. Price could obviously keep on doing this, such as it did yesterday. That was a possibility that we explored, right? Price just rallies all day. This can be possible. But again, now is more of a time element my concern with right, being the day before FOMC. I do think that if the market will rally higher, this can give a reason for FOMC to trade back in the range. If we look at the 3-day look back, we can see that price on the 3-day look back range comes from a classic buy to a seek and destroy. I was rewatching my video and I labeled this as a swing to Z, but this is wrong. I meant to say that this was a seek and destroy profile, right? Price taking the highs, the lows, staying tight inside of a range without finding any expansion above range high or range low. Okay, so Thursday classic buy, Friday seek and destroy. Okay, so expansion to consolidation, and yesterday was also a phase of expansion, right, represented by a classic buy. Okay, so we know that the drawn liquidity is range high plus more. Obviously, we can use the range of standard deviations on the 4-hour, okay, such as 31,500 up until 32,000. Okay, so we can analyze here the previous day's range. The fact that it was a classic buy will likely leave us important levels inside of the range. So here you can see very thin profile, right? Price, by thin I mean the type of delivery that it was. Price always traded from expansion to tight consolidation to expansion to tight consolidation, right? It has never really created any significant shakeouts or retracements inside fair value gaps. But nonetheless, we can analyze this range. I'm on a 15-minute chart, and we can see what's located around the quadrants, right? So at range low, we have obviously the new week opening gap at 75%. So in discount, we have the range of a mitigation block cutting through a fair value gap. Okay, so I do believe that this, if for whatever reason price will revisit this range, it should be sensitive around the quadrants of it. At 50% of the range, you can see a clear accumulation phase. Okay, so this is represented by the range of a bullish order block. And at 25% of the range, so in premium, we have the range of overall a bullish order block. But personally, I do prefer this rejection block here. Okay, in my opinion, this rejection block, well, not in my opinion, but it is a mitigation block, right? Price traded higher, lower, higher, lower, higher, right? So I do believe that this wick also should be sensitive, right? Which so far it is inside of Asia. Price is sensitive to these levels. Okay, so we have at the low the new week opening gap. We have in discount the range of a fair value gap, of a bullish order block, of a bullish mitigation block. Overall, this represents what? This represents the Asia expansion. At 50% of the range, we have a bullish order block. This represents the London consolidation, right? So Asia expanded, London consolidated. And in premium, we have, right, we have a bullish order block, we have a mitigation block slash rejection block at these levels. Right, from this phase of reaccumulation, price revisited, say around 50% of a fair value gap, maybe not, let's see. Right, so maybe missed 50% of this gap by a few ticks, and from there saw another phase of expansion. And this represents New York, right? So you got Asia expansion, London reaccumulation, pre-market expansion, opening range, right, or at least going inside 10 a.m. reaccumulation, and then expansion followed by consolidation. Right, so I do believe that, right, because the market here closed as an accumulation phase, and this accumulation phase is preceded by the range of an expansion, right? Pre-market opening range, basically from the pre-market session until the London close range, right? Price had expanded and then consolidated. So I do believe very likely that we will be making a new high of week today. Ideally, even all-time highs, right? That would be my guess, if price will first revisit some discounted levels inside of the range. Okay, it's going to be very important to see once, right, if it does come back inside of the range, obviously at what time of day and what's the reaction out of these levels, all depending on where price is trading and from which phase of price delivery does price come from. Look, this could be enough. I don't think it's enough that this mitigation block here, rejection block at 25% of the previous range, can be enough to send price higher. I don't believe so. If this level holds, then I believe will be something like this, some kind of consolidation at the highs, right? Some kind of continuation of this range here. Overall, I do prefer the range of the London order block, okay, because it's located right at 50%, has a fair value gap above it, has a fair value gap below it, right? So maybe because here this is such a tight range, maybe the order blocks will get sliced through, right? Since price may come back to some kind of liquidity pool or inefficiency inside of the range. Right? But even if it does slice through it, I do believe that right, if you can identify the right profile for this, that these levels will become reclaimed. Okay, and that's where the opportunity is, in my opinion. Okay, so recap. We had a large gap up yesterday. New week opening gap had a rising window of around 2,000 ticks or so and kept expanding. Right, so yesterday's range, classic buy day. Price is trading near the low-hanging fruit target for the week, right, being all-time highs. I do believe that price will trade to it today. This doesn't mean that today needs to be an expansion. Okay, price can simply create some kind of consolidation profile, all while taking all-time highs. Obviously, you want to watch out for the scenario where price trades at these levels higher, takes out the highs, but the S&P 500 doesn't, right? And from there comes back in the range. Okay, so in terms of discount, we have the range of a premium SIBI that's been inverted, and in premium we have all-time highs. On the 4-hour chart here, the 4-hour chart, I like the standard deviations mostly, right? And you can see that we may be due here for a phase of reaccumulation inside of the range, right? So the drawn liquidity is higher, but because of where we are inside of the range and because it is the day before FOMC, which is going to be the main driver for the week, I do anticipate that price will want to revisit some form of discount before trading higher. And if it doesn't, okay, then I'm going to be paying attention to any divergences formed either with the high or above the high, okay, through sessions. If not, some kind of this, right, some kind of consolidation day. I would have a hard time, honestly, say from these levels, price keeps trading higher and New York opens at these levels. Unless 930 gives me something, right, something like this, something very obvious at these levels, I would have a hard time being long. Too much of a premium rally, without a phase of consolidation, at least in the range. I'm not saying price needs to retrace, but at least a phase of consolidation, I would find that suspicious going inside of FOMC. Overall price is hovering around the upper quadrant of a bearish order block located at 75% of the 3-week look back. So these levels can be used on the lower time frames intraday, right, or at least to see what the other sessions did around the quadrants of this level, right? If the sessions left some kind of order block or fair value gap, or overall has the previous sessions, have they created swing points, okay, around these quadrants. And on the 3-day look back chart, we analyzed the profiles, right? So the phase of price delivery, price comes from an expansion to a consolidation to an expansion. So we do believe that price will keep trading higher from these levels. And we analyzed the range of the previous day's range. We saw a bullish fair value gap at 75% of the range. This represents the Asia expansion. We saw a phase of reaccumulation at 50% of the range, represented by a bullish order block. And we saw a phase of reaccumulation here inside of New York, right, representing here the expansion of New York overall. The fair value gap, this wick here causes the reaccumulation inside of the inefficiency, and from there price distributes higher. Okay, so overall I do believe that the low of day should form around one of these quadrants. And again, in terms of how to approach the day, well, it's going to be very important in seeing where this price come from, right? This price come from premium, this price come from discount, um, or has price been kept inside of a tight range, right? That's likely the scenarios that are going to happen coming inside New York. So it's going to be very important to see, right, to use then the quadrants of the levels from the previous day and seeing what is being used and what is being inversed. Okay, so I think that's all covered for today. So let's see what tomorrow gives.